TAQ Capital, technical analysis quickly.
This is not financial advice. I am not a financial advisor. Before taking any action based on the information provided on this channel, it is recommended that you seek the advice of a professional licensed financial advisor.
Let's do this.
All right, welcome back to TAQ Capital, everyone. I've already recorded the video. I just wanted to jump on here in the beginning and say this is longer than normal. My apologies. And it's for good reason, though, I believe, because I'm really explaining this wedge setup that I use that nobody I've ever seen uses. So, and I've watched quite a few YouTubers on stuff, especially in my early days, and I've never seen anything like this. But the nice thing about it is it predicts the next short while. So when you see a massive dump, because you can see the way that your wedge is shaped, you don't panic. You know that it's going to be going up. And as long as you know in your liquidation and you're being responsible and managing your risk, you're going to be fine anyway. So it really helps be that blankie, essentially, for you during the emotional roller coaster of trading in crypto. So stay with me. I think you're going to learn a lot, and it really does spell out what Bitcoin's doing in the moment. So on that note, let's take a look at these crazy ass wedges. If you're new to the channel, this is going to look, well, crazy ass. If you've been here before, you probably know exactly what I'm talking about already. With the 1, 2, 3, 4 out scenario, we got a first hit, second hit, third hit, fourth hit, out. And it does this all the way down these wedges. Orange, first hit, second hit, third hit, fourth hit, out. And so on. And now I'm going to zoom in here. Now, keep in mind that this pink wedge on the outside, the thicker one, this one we've been in since the peak of the market up here. So I've been a proponent that we're not breaking this now, and that the 17K was not the bottom. I think it was going to be 8 to 10K, and it still may be. But I thought we would hit this before breaking out. And now I'm thinking we may actually break out of this wedge first. Now that might end up redrawing the wedge. I doubt it, for one as established as this going all the way back here. But it is a distinct possibility that we are still, or that we're actually going to break this wedge. Now, if we did get a hit here, for instance, and a hit down here, I'm going to put indicators there. I made them smiley faces. But if this thing ended up coming up, hitting there, and then coming crashing down, well, I guess I got to move that one because it can't go backwards. That was stupid. And then it came down here and hit that. Then we would just take this wedge like this and move it up there, and take this wedge and move it down here. And then what you would have, and the way it plays out, is a hit up here, 2, and then 3, and then 4, and then up and out. That's what I mean by redrawing a wedge. But I don't know that that's necessary. As I was saying, though, I'm going to zoom in here because this is where we're at right now. So for all you day traders that are trying to jump in and do these swing trades and scalp trades and so on, this video is going to be for you. Okay, this is on the daily. So the candles are too big, and this just looks like a spider web in your garage. So I'm going to have to drop down to, say, the 1 hour, 30 minutes, something along those lines, so you can see how these wedges have played out. So this is the 30-minute chart, and we started breaking down on the 13th of September, okay? And as we came down here, we actually ended up in this blue wedge, very unorthodox wedge, but that's what happens when you have these extremely quick movements. So by way of backing up a little bit, this white wedge, we started back here on September 6th, and we had bullish divergence, which I posted about on the 1 hour, and we rode this up. So we had let's try that again. 1, 2, 3, 4 up here, and then we broke down and out of the white wedge. This was a very strange wedge. I'm not sure what all that was about, but, you know, the wedges don't lie. So once you started moving up here, 1, 2, 3, and then 4, we didn't even get a bouncing out. We just free fell right through it. So it was 1, 2, 3, 4, and we were out. Once you started moving up, you knew we had to break down. The question was when. So that's why I said I'm still standing behind the fact it's going to break down. I'm still standing behind the fact it's going to break down because it's going to break down. So then we dropped into this blue wedge, and that's what we're in here. We had a 1 at the top of that, and then 2 here, 3 here, 4 here, and now we're working on breaking out of the blue wedge. These blue wedges like this, the way that they're kind of down and then like that, these do happen because, again, that's a giant move. and then up and out, you'll see that, but it doesn't happen that frequently. So that's one of them that we're in. But you can also see that we changed directions here, right down here. You can almost just get away with drawing this one and not doing anything with the blue at all. But it bottomed here. You had divergence right here between the two of them. And then we shot up there. So that's 2, 3. That was a miss. At first I thought it was the hit, but then it went up again. And this one is actually a hit now while this one is a miss. And then we did our swing down, which comes way down, but doesn't hit this one. And now we're going to do our up and out. So we're headed up. So the question is to where? So now let's look at some of these other wedges in here, and I'm going to jump into like the 10-minute chart. Okay, here we broke down into this orange, 1, 2, 3, 4. Then we broke down to this teal, 1, 2, 3, 4. Then we broke down into this green, 1, 2, 3, 4. And now, is that right? Hold on a second. Yes, 1, 2, 3, 4. And then we broke down and out. And now we're in the orange here, 1, 2, 3, 4. And now we're working our way back up to break out of the orange. And in that process of breaking out of the orange, we've got this blue here, 1, 2, 3. And, oh, that's the one that's currently unfolding. That's right. No, that's the white. I just had the blue one drawn up by accident. So 1, 2, 3, 4, break down. And then we're in the white, which is 1, 2, 3, 4, bounce, break down, which is also the yellow here. We got 1, 2, 3, 4, hit and swing down and up. So that's swing down and up that we're currently doing in the red from this point. This is a huge swing down and up. We just did in a small version in this yellow. 1, 2, 3, 4. Nope, I'm off there. 1, 2, 3, 4, and up. So no, it's actually slightly different than the way it played out on the big red, because the big red, the fourth hit was up top and it swung down and up. I'm going to zoom in on the 3-minute just to confirm that, because this wedge is just tiny. Jesus, I had to drop down to the 1 minute just to be able to see the differences here. So 1, 2, 3, 4. This is actually a miss. And we came up this way and out. Because if I zoom way in on the yellow, you can see we have a hit there, we have a hit there, and that's actually a miss. So that's the way it played out. So our crossing from this yellow line to this yellow line went this way. From here, instead of just going across, it went from here straight up to a miss to a tanking back up. That's the way it decided to cross the Delaware. Good Lord. Okay, so what are we doing now then? If I switch to the 30-minute and go back to this blue one, we're currently testing it here. So again, 1, 2, that's 3, then 4, and now we've come across to break out. So we're going to be breaking out of that one, working our way up to the orange one. Then we'll be breaking out of the orange one, working our way up to the red one, and then we'll be breaking out of the red one. And the whole while, we're going to be in this pink one. So zooming in here on the pink wedge, you can see that we got a lot of up and down in a short period of time. So essentially, what we've got is a very slow moving coin. So the question becomes, why? Well, let's do the Fibonacci retracement here. We came up, if we count this as our first run, this is our retracement. And we have so far retraced to just below here. Now, usually, though certainly not always, we kind of get somewhere in the middle here. It's between this line and this line. And we didn't. We barely nicked this, which often happens in a more bullish scenario. But, you know, once we shot up off of the meltdown, we've fizzled. And this is very slow moving because we're currently on the 30-minute candle, or sorry, 30-minute time frame. So these candles are each 30 minutes. So, you know, we have a couple up and then one down, and it's a bigger one down. So it's like 2 steps forward, 1 step back. So it's just slow moving. It is possible that we end up doing something like this, where it actually does retrace to around here, and we're actually still playing out the retracement. So we did this, and we're going to do something like that before we take back off. So how it gets there, I'm not 100%. I mean, no one is. But where we're going is outside of this orange and outside of this red and towards this pink line up here. And where would that pink line be if, or rather when, this plays out? Well, I guess technically it's an if, because the wedge could end up being, something like this, where it goes 1, 2, 3, 4, and then break down. You could do something like that because the wedge is currently unfolding. The only way you would know you're not doing something like that is because of all the other wedges that we've drawn, like that. So when I turn these off, whoops, not that one. When I turn these off, they go, you don't really know, but when you turn them on, you can see that you were in the white, then you were in the yellow, and you broke up, and you have a better idea of where you're going, because all we did here was get rejected on the blue, and now we're swinging down, and the swing down could be lower, and then we're breaking up out of the blue, and heading towards the orange, and then heading towards the red. So we're just hitting these different resistance points that the wedges have shown us are there. So if I turn the other ones off and just keep the blue wedge, you can see that we've come up here, hit, we're bouncing. I don't know how big the bounce is. We'll break up. And then my guess is that we're breaking up towards the pink line when it's drawn out like this. So even if we do come down some more and hit the pink line here to get that somewhere in between these two mark, and then we break up out of the blue, out of the orange, and out of the red, it's all the same. So, as long as you're nowhere near a liquidation price, if you're using leverage, these things like this don't worry you, because you can see it's just a natural way of playing out. And if you got in at the right time, down here, you're not even in the red anyway. You're still in the black. And you're just kind of watching the money add up. Now, granted, up here you may have made, $1,000, and now it's down to $500, and you're kind of watching your money all over the place. But just set it and forget it, and check back on it. I've got different notifications that will go off on my phone depending on where it's at. Because right now, like on the 2 hour, this is where I saw this thing coming, because we were in this tunnel here, and I knew that we were going to have a sharp move, because essentially the tunnel creates pressure. So when we have the sharp move, this sets us up for a long move the other way. So essentially, like I've been saying, these Bollinger Bands act as an elastic band. So as the candles push out on it, it builds up pressure and then slings the other way. But for right now, I mean, it's obviously not slinging. It's a very slow moving transition here. But the point is this added pressure is now resulting in an explosion up. Again, I used the word explosion. A slow moving coin going in the other direction. But you get the point. So then, where are we going to go? I mean, because we've got the orange wedge back here, that 2 hour might be too far. Let me drop down to the 1 hour. We've got the 1, 2, 3, 4. This is essentially a slow swoop up and out. So we're going to go up out of the orange, and then we're going to head up here to the green. And if I switch to the 10 hour, you can see where the green goes back to. 1, 2, 3, 4, swing down and out. Now, we actually didn't do that, and here's why. This, I thought, was the hit as it unfolded, and this would be a swing down and out. But you can see I had to move the line to accommodate this hit. So this is actually the hit. So if I zoom in and I turn off my Bollinger Bands and so on, this one you can see is a hit, while that is a miss. This one you can see is a miss, while that is a hit. So the transition from this green line went like this, and that's when it made the full transition. Now we're in the actual swinging out. Now, is it possible that all we're doing is the exact same thing again, and this will go up like that, and we will move the line a little bit more? So then these two here, this would be the first miss, this would be the second miss, this is now the first hit, and then we do a swing down and out? Yeah, it's possible. The triple thing I've only ever seen once, so it does happen, but it's very rare. This, though, this happens more often than I'd like. Like, I don't know, 30% if I had to pick something, maybe even 40%. No, not that high, 30%. And we're having it happen now. But you can see with all these different indicators that we're doing these bounce, swing, and out that you only get from the wedges, unless I'm frickin' missing something. You can see that the trajectory now is this direction. And if it's that direction, then I'm wrong about having to come back down near, though I never said touch, the other side. So it looks like we're going to get our breakout. So the question is, if we break up this way, is it a flop scenario, or are we just going to go back up and 17,000 was the bottom? And that I honestly don't know. If you look at the peach wedge, let's call it peach, it's this one. If you look at this wedge and how that's unfolding right now, we got to hit here 1, 2, 3. So I mean, theoretically we should have a 4 somewhere up here, possibly even further out. That's getting into the $40,000 range. So if that's the case, then we're not flopping. But it also does mean that because we have this established line now down here on the bottom, that from here we would then have to flop down and break under. And that would bring us back down to that $18,000 mark, which as long as we see it coming, doesn't even matter, because you get to short it on the way down and then long it when it goes back up again. And it's not going to, because this isn't steep, the height of this isn't far off the height of this one. It's not a steep incline. So when this comes down, it can just poke out and then go back up. And if it goes back up, then whatever this second point is here, which I'll use an indicator for here, I'll put a smiley face. So if this becomes our next hit, we would draw it down here like this. This would probably become our first spot on, or our first hit on the upper. So then the new 1, 2, 3, 4 out would look something like this. So we would hit here, there, and then break out. So then the question that I get asked often is, then why the hell, or how the hell do you ever advance if you've always got to go, 2 steps forward, 2.5 steps backwards, because you've got to retrace down underneath this line? Well, you only have to retrace down underneath this line if this line is pointing up and this line is pointing up. So what you probably end up having at some point, and actually possibly even here, is if we take the smiley face and we move it down a little bit more, the hit could be here. So then this is now pointing down, the other one is pointing up. You could still have your hit through there, but instead of having the white line need to break out the bottom of this peach wedge, you would actually have it like this. And you'd have your first hit, your second hit, your third hit, your fourth hit, swing down, break out. Because it can break out either up or down out of these sideways broadening wedges. So we'll see as it unfolds. Unfortunately, while this is the closest thing I've ever found to a crystal ball, these 1, 2, 3, 4 out wedges, they're not a crystal ball forever. It doesn't show me how it's going to play out, in 2024. I have no idea. As you create these bigger wedges like this, you can see stuff like that play out. So, theoretically, you could try to do something like this. So like this is on the 3-month chart. So if, you had your first hit somewhere over here, like at the beginning, say, second hit here, third hit in here, and then fourth hit up here, you're talking about having to come down and out. That's $0. So you not only don't have a beginning, you can come down over here. So it doesn't really do much for you at all. It's kind of dumb. So I don't get to predict that far out. And that's where things like Fibonacci circles come into play, the rings and Fibonacci channels. And I can show you that here for 2 seconds. For those of you that haven't seen them before, these are the rings. So you can see like we rode the ring down here, and then we went across. As soon as we crossed it, we had a dump. As soon as we crossed it, we had a pump, and then we kind of reset in the middle of the ring. As soon as we crossed this one, we actually rode the ring up. And now we're dumping this way. And then I think we're going to break out. We might even ride the ring up here. And then you can redraw more rings and so on. And I'm going to actually put up a video on how exactly to do that at some point. But I think the wedges do enough for me because I'm day trading on Bitcoin. Most of my altcoins, I'm just hodling. If I see a huge dump coming in on an altcoin, then I'll get out. And if it's available, I'll short it. and then get back in at the bottom with more of that same altcoin. But as a general rule, I hodl. I don't try to get in and get out and get in and get out multiple times a day. The altcoins are just too risky because when Bitcoin moves, your altcoin does something crazy. You have to watch too much stuff, and the volatility in the altcoins is insane. Bitcoin is much more predictable, and the wedges really amplify that. So I hope you found this video helpful. I'm sorry it's a long one, but I just wanted to cover all these different wedges. I've used wedges in the past in my videos, but I mean, it's more like this. It's not every single time there's a change. And, you know, this particular section here had 70 wedges in it. So I'm going back to that because that's the easiest way for me to win. And when I couple that with Bitcoin, I'm almost every single trade is a win, especially if I don't have to use a stop loss and I jump in while watching it. It allows me to adapt a heck of a lot more. I mean, it takes a little bit more emotional control because of how volatile the market can be, but it's what I find that works best for me. Stop losses are great, don't get me wrong. Definitely learn how to use one. There's a time and a place for sure. But because I get to work from home and I'm sitting here looking at this stuff while I'm working, I can react fairly quickly. But anyway, that's it for me. I'm for real leaving this time. Thank you for watching. If you found it helpful, like, share, and subscribe. All the socials are down below for more timely updates. And I appreciate your time and have a great day out there. I'll see you in the next video.